Welcome to another edition of Cattle Chatter. I'm Susan Littlefield. Brad Koima is joining us today with Koima and Varlick out of Sioux Center, Iowa. And I had to kind of do a double take when Brad told me what was happening in the world of cash today. We're going to talk about this 228 level and also the jump we've seen in the August feeders. And really the question is, how much wider is this space going to widen? You know, Brad's been talking about this for quite some time. So, Brad, let's just jump into this. 228 on the cash. Wow.
Unbelievable, really, huh, Susan? Thanks for having me on, of course. Fitting me in with your busy schedule. Looks like you're having fun. Everybody ought to go to DC once in a while, right? It makes you feel good to be in America.
Absolutely.
The market's increasingly difficult, actually, for me. Anybody that follows, you and I's programs, I would think would remember that, we were talking a while ago about $300 August feeders, perhaps, maybe $220 fat cattle. And now, you reach areas that you thought were possible. And I'm not going to lie, as a broker, this is not easy. I'm not bearish, but there is an old saying, too strong to sell, too high to buy. And you're starting to get into some of that stuff now, But what you started with is really a big deal. And that is, this has been, again, as it's been for the last 15, 17, 18 months, a cash-led rally where the futures are reluctant. They hang back. We keep searching for that long speculator. We look for the funds to come in, and the funds are coming in huge here right now, of course. Somebody to buy the futures. And it seems like it takes a strong, jump in the cash market for that to happen. I kind of fell on the sword last week and maybe even the week before, saying that I'd been kind of wrong. I thought the basis would get wider. I thought that the last part of this rally would be almost all cash, and that the futures would lag behind. Okay, thinking that 15 under or something like that would probably not be a surprise, at least to me. In other words, have cash $15 above our June cattle are. Well, we did it today, basically, with futures at 214 and then the 228 bids in Iowa and Nebraska. So the reality is you have to somebody that wants to go long June cattle at these levels, and you're probably getting a harder time recruiting that. But the cash market, awesome. Show lists are small. It's the same story that we don't have the cattle in the north. Pulled forward, current, can't wait to sell them because they make so much money. All this stuff is still going on, and that's still a very healthy tone in the marketplace for sure.
So the big question is how long? I know that's asking you to look, into the future, but we just continue to keep building momentum for these cattle.
Yeah, I wish I knew how long. I don't. So you know that, and hopefully everybody else understands that disclaimer. But some of the cues, if I could use that word, cue, that I'm looking for is slaughter and weight. The weight's been stubbornly high forever. It was up 2 pounds again week on week this week. The slaughter level, though, has been just a little bit disturbing to me, really, for the last 4 to 5 weeks, but especially the last 2 weeks. 559 kill last week and 555,000 the week before that. So the question becomes, are we killing the available supply? I would guess that the available supply is a little more than that. Now, I got to balance that with what I said, 3 minutes ago, and that is that I think, when you're pulled forward, when you're selling next month's cattle this month, you can slow down your marketing, and it's not the drama that it would be if you're already slowed down, right? If you're already behind, if you're already not current. But you can certainly imagine that the packer's trying to figure out some strategy here where he can get his arms back around this thing and get his leverage back instead of having to chase every week like he does. Of course, the irony is we're opening new plants, not closing them, as we've talked about over and over. And so I don't know, seriously, I think that one has to assume that there's a few more cattle in June because of the placement pattern of calves. There's probably more cattle in July than there is in June. Demand is always poorer in August than it is in July, and there's probably more cattle there too. A long way of me of saying that it seems to me in the short term that there's not enough cattle around unless some black swan event happens. But if you slow that kill down, maybe in 6, 7, 8 weeks or something like that, maybe we're talking about a different story. So I'll be very dialed into what the slaughter levels are, and whether these weights change. Weights should go bang down steeply, and they're not. Okay, because you go from these big yearlings to these calves that are hardly there. So we'll keep an eye on that, whether that happens or not. So far, it has not seemed to budge at all.
What about the August feeders and the jump that they took today?
Unbelievable, really. And I got to smile a little bit. I mean, nobody likes to take a victory lap right in public, but I kind of thought we had a shot at $300 feeders, and people thought I was nuts. But now from here, I get a kick out of it. It's like, is it going to go to 330? I have no idea. I can tell you that there's a couple things going on here, though. One is the cash feeder market is, I was 30 seconds late to your program here to start because I was watching a set of 9 mates sell at a particular sale barn that I like a lot. And I mean, the cash feeders are crazy high too. And good for you guys that are raising them. You deserve it. But the other component of that is the feed cost. And, this corn trades like a falling piano. I mean, so the corn goes down every day and the cash feeders are high. What are you going to do, right? I mean, it's grass time and these people have made some money. I don't think the feeder cattle thing is over with yet. It doesn't appear to be because of all those reasons, I guess, right? It'll stop when it stops, but it doesn't feel like it's today.
So let's take a look at June cattle. When you look at what's going on with them as well, some decent trade, new highs being set. It just seems like the momentum for these futures just continues to go on.
It's amazing. And one other thing is, if you look at the seasonality of the June cattle, believe it or not, from the first week of May, there's a steep season. Seasonals are seasonals. They're not reliable. I got to go with the disclaimer, right? The seasonals don't always work. But if you looked at the last 5 years in particular, the June cattle have a real propensity to go higher after the first week of May. We're in the middle day 2 of the Goldman roll where that big fund rolls. It's long June to the August. And today it actually made a dime, which is counterintuitive because you would expect the June to be the weakest, not the strongest, but the June was the strongest, probably because of the cash. So usually when you get through the roll, the June would gain on the rest of the stuff too. So, it's going to depend on what the basis ends up being. I got to think here that with the cash as good as it is, I thought the packer this week would maybe try to dig in a little bit. Last week, he bought a lot more cattle in that 15 to 30 slot. A week ago, we talked about that. There's only like 5,900 in that. Well, last week, there was 29,000 in that bucket, if you would, of that negotiated cash bucket, right, of 15 to 30 days. So I thought, some of the packers were probably, I'm tired of chasing it. Let's get some cattle around me. But even at that, obviously, with the cash being up another 4 to 5 today, that didn't work for him this week either.
You talk, Brad, about the basis and the continued widening it does. Let's pick up where we left off from last week.
Well, I think people say, Brad, who's going to buy June cattle up here? Well, it's the hedgers probably, first of all. So if you can sell cattle 15 over, you're already regretting that you had them hedged. Let's just be honest, right? Because you gave up some on your upside. But if you can pick up $10, $12, $14 on the basis, you're going to do that. Now, there's nothing that forces convergence when you have basis this way. If it was flipped around the other way where futures were above cash and that was the best bid, enough of us guys would hedge the cattle, sell the cattle, make delivery, force the convergence to happen. But there's nothing to make that happen. Not the way this contract's set up anyway. There's no demand feature. It's very difficult to get cattle dead. If you are long, you don't know when they're going to get delivered, where they're going to get delivered. So. And don't forget that the June contract is actually deliverable until about the 10th of July. So the market's trying to guess a long way out there what cash cattle are going to be worth, not today, but almost 2 months from now. So it's complicated, but I think in this kind of an environment with the cash this tough, you're going to have a wide basis, it looks to me, and probably for a long time to come. We'll be talking about this probably all year.
So what about the Worthing discount? As we wrap up our conversation today, let's talk a little bit about that.
One little highlight.
Yeah.
Because, I ranted on here a couple of times, right? About the and any place else that somebody would stand still enough long for me to gripe about it. So the CME, after the much long-awaited contract changes that they were going to make, they made one positive thing, and they did eliminate the worthing discount. I'm talking about the fact that for many, many years, if you delivered cattle in Worthing, South Dakota, which is 25 miles from where I live, you got discounted $1.50 if you did it in October. Completely discriminatory. And after a lot of arguing, fighting, encouraging, cajoling, whatever, they finally took it off. The other changes that they made was they increased the deliverable weights. That I'm not a fan of. They did not change the specs on the grade and the yield, which also I'm not a fan of. I mean, let's get modern here. I think the Worthing discount, I'm very thankful, glad they did it. But the rest of the changes, to me, they made it a more of a discountable kind of a contract again. But whatever, maybe we'll work on that next time, and we'll see once with limited success, I'm sure.
All right. Best way for folks to get a hold of you, Brad?
Well, you can check us out on kkvtrading.com, or the phone number is 712-722-0023.
All right. That's been another edition of Cattle Chatter from Washington, D.C. this time. Looking forward to catching up with you next week to talk about what this cash is doing. That's been Brad Koima joining me with his Koima Varlick out of Sioux Center, Iowa. I'm Susan Littlefield with Cattle Chatter.
The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.